All right, happy Friday, folks. Welcome back to Who's Your Boy Trades. Definitely a wild week in the market. We saw a nice rally the first 2 days, only to be given almost all the way back up by Friday. Unemployment rate came in at 3.5%. Fed wants to see that at 5%, so the market reacted negatively today. Sent it back down to those June lows. Looking at SPY here, we did bounce a key level right here at around 360.70, which was good news for bulls going in next week, but it was a pretty weak bounce. You expect end of the day to squeeze a little bit higher than that when you get buyers stepping in. But overall, weak close, ugly daily candle. We got the Fibonacci up here from the COVID lows, 352.76, 50% retracement level. That could be a good spot to try longs for just a short-term bounce. But ultimately, I think we're going to head back down here to the pre-COVID highs. So, we're looking right here around 338 on SPY. As bad as that sounds, that's just probably where it's headed at this point. Especially we got PPI and CPI on Wednesday and Thursday next week. Bond market's closed on Monday, so yields won't be able to send the market down if they start rising because it'll be closed. We'll have to keep an eye on the dollar, though. That started to, recover today. Obviously, the strongest names in the market right now are in the energy sphere. I talked a little bit in my last couple videos about XLE, XOM, Oxy, obviously, the big Warren Buffett ad months ago, has been working really well, especially for options. We're still in some XLE, but it did kind of sell off with the market towards the end of the day, which was not a good look considering, crude oil was still heading to new highs, around $93, I think is where it closed today. I have to take a look to be sure, but it definitely looks strong, and I think these energy names still got a little bit of room left to, at least make new 52-week highs. I mean, we're literally a stone's throw away from those 52-week highs. Looking at XLE, we could pull that up just to kind of go over it a little bit here. I mean, obviously the all-time highs are on XLE are over $100. We're not quite to that level yet. Might not see that level unless things start getting out of hand with the housing market and everything. But right now, everything as far as energy has been pulling back when the market pulls back in fears of a recession. So we'll see. The high we hit today was 83.38 on XLE. Do still have some 90 calls for March of 2023. So far, we've done 270% on those. So we've already trimmed quite a few. Got a few runners. Make sure you check us out in the Discord on Bullprint. I'm serious though. Check us out on the Discord. Name's Bullprint. You get that free week trial. Don't miss out on it. Check us out for a week. See how you like it. Go from there. All right, on to the next chart. We got to look at AMD. This thing just looks awful. But we have filled all the gaps on this chart. It came into some key support from 2020, so we'll see how it holds up from here. This is going to be, they had that bad news. They're basically, cutting $1 billion off their earnings expectations, so they got smacked today, over 13% loss. But, when you have this many touch points from 2020, some key support here, you want to start thinking about maybe scalping this for some longs on the short term. I don't think it's going to have much downside initially next week, unless we get bad PPI and CPI numbers. But I think a lot of analysts, including myself, are kind of expecting those to start coming down a little bit, slightly. Obviously, gas has been on the way back up, so that could affect that too, but the Fed doesn't necessarily look at gas. They look at the core CPI, so we'll see how that number is as well. But yeah, this just looks bad, other than the support that we just ran into today. But it did not have no type of bounce at the end of the day, so it's not really one you want to have to take at least a couple days to watch this one. I took a chance on some longs, but I bought leaps on it. So, I bought plenty of time, and I went light, just grabbed a starter position. So, I had to take a little bit of a chance here coming into these levels. So we'll see how that plays out. Nvidia, it hit 120 a couple weeks ago, and we saw a nice bounce over to up to 132 in the first 2 days, Monday and Tuesday of this week. So, I'll be looking for something like that, even though it's no guarantee. It's definitely a risky play, risky entry. When you see a chart coming down this bad, I'm trying to catch a falling knife, basically. I don't recommend that. But after some of the plays I ran, I'm basically run this option with all profit from previous plays. So if you take a little bit of extra risk when you have a really good week. So that's kind of what I'm doing with this trade here. All right, I also want to look at DraftKings today. Not a name that I normally trade because it's been a company that's been awful as far as losing money, and those are no good in bear markets. But we did get some news. Looks like they might be partnering with Disney, or ESPN rather, but that's part of Disney as well. So we did see a pop yesterday. We saw it come up to 18.23. There has been a lot of value building, in this area down here around in the 15s. So there's been some buyers stepping in. We did hold the 16.30 level today, which is what I was watching on the daily chart. This is a hourly. It's just a 3-month window. The daily is kind of short on DraftKings, being that it's a newer stock. I can kind of show you what I mean by that. I mean, it just looks awful. Obviously, we see this boom in 20 and 21 where it just ran up over $70, and now we're trading all the way down here. It's just not the best daily to look at. I prefer to look at a shorter term chart when you've had that terrible of a run, because obviously we're trading completely different levels down here. But with that good news, with the partnership with ESPN, I ended up grabbing some longs on this and some shares as well. I was looking for a bounce off $16.30 today because it just was coming down with the general market. It tapped them highs yesterday, sold off right away, wicked it back down. But yeah, when I seen it hit 16.30 today, there's a decent volume shelf there on the daily chart, so I decided to grab some longs and test it out. See if we can, if we get a market bounce, I'm looking for, I think we can go see $20. Over the last 3 months, we've seen some decent pops on it up here at 1977. Let's see, in August, when we had the big rallied all the way to 21.47. And I am expecting another bear market rally in the very near future. It doesn't look, it's hard to see that now after, we just gave up the gains for Monday and Tuesday, but I still am expecting a nice rally. We're still trading in a balance as far as the market's concerned, and there's nothing to worry about unless we break those lows. Then I can always change my mind and switch sides if I feel like we're gonna drop the new lows. Like I said in the beginning of the video, those pre-COVID highs are a level to watch, because that's definitely a spot where the market can get back to when everything in the macro arena just is this bad, this negative. You got President Biden talking about Armageddon if Putin launches nukes. That's definitely not what the market wants to hear right now, and that's not what we want to hear as people either. So definitely a tough environment to trade in. But once again, that's why I recommend you come check us out in Bullprint. We figured out how to trade this market, and we've done really well. Done really, really well. It's a trader's market right now. It's not an investor's market by no means. Equity's just been getting smacked, especially if you just started buying equity in the last couple of years. You don't want to be in that boat right now, just holding. There's plenty of opportunities to buy things at low prices right now, and so if you're just starting a portfolio, it's a great time to start adding. You can always average down. I feel like the S&P can go to 3,000, but we're getting awfully close to that level already, so you don't want to miss the rallies when we do get them, so you might as well start picking it up here while we're at these levels, especially on some really good names. For example, Google. I still like Google. Under $100. It's got some. Let me pull up the chart. It's got some. It's got a solid demand zone as we get closer to 90. 95 too. We bounced off there. You've seen some volume on the volume profile just pouring in when we hit those lows last week. So there's definitely buyers stepping in when it gets under $100. And you're going to see this mountain continue to build because people are going to be buying it down here whenever it gets down here. Let's look at the daily real quick. Okay, I got the fib chart on this too, the Fibonacci levels. So that 101.36 is a 50% retracement. You notice it reclaimed that on Monday and Tuesday, but it fell right back below. So, the demand zone's down to 89.45. Actually, I know I said 90. But, if we get down to this level, there's a decent, shelf right here, there's going to be buyers stepping in. Institutional investors, big money investors are going to step in at these levels because that's cheap. That's a cheap pickup for Google, regardless. Going back to 2020 lows, and as far as Google's concerned, yeah, we could see 76.30. That's the pre-COVID highs. Obviously, before the split, it was a lot pricier back then, but obviously the chart's been broken down now, as far as this 20-for-1 split. So yeah, we can see Google back down to these levels, but it's going to be tough for it to get to those levels, in my opinion, because people are trying to buy these. People are trying to buy the bottom already. People have been stepping in. There's been good volume on a lot of these stocks when they get down to these lows. So we'll see how long they hold up. Obviously, they could fall further, but now's the time to be starting small positions. Average in, dollar cost averaging in. On the long-term investor side, that's where you want to be doing. Warren Buffett always said, be greedy when others are fearful. There's a lot of fear in this market right now. If you want to create generational wealth for your family, now's the time to be buying stocks. Don't load the boat. Don't put all your cash in stocks, but dollar cost average in over time. Of course, please remember I am not a financial advisor, though. I can recommend that you buy stocks now. I'm not going to tell you which ones to buy. Like I said, buy good companies. Do your research. Do your due diligence. Dig into those companies and look at their balance sheets. See, their free cash flow. Check what their PE ratio is. There's things you could do, to really make sure that you're buying good companies in this environment. So that way, long term, you're set up with a nice portfolio. And you definitely want to, have a diversified portfolio. Don't just buy all tech companies. Look at multiple names. Think outside the box a little bit. All right, we'll also take a quick look at Oxy since I was talking about that earlier. It did kind of get overextended today. You can see it's just been on a tear this week. Energy has outperformed everything this week. Did sell off at the end of the day. We did see a big flow come in on puts. They were a little bit early, but by the end of the day, they were making some money. So, kind of see why that happened now. And we did, we tested this tough level up here. Wicked it pretty much right away. But, I think this still has some upside. So I'm going to be looking for a dip in the 68 area right here I have marked off. If it retests that next week, I'll probably add to my position. Because I do think we should be visiting these 52-week highs and possibly breaking out over 76, 77 area in the coming weeks. It could take a while. Like I said, we could see some pullback, see a little bit of consolidation here is kind of what I'm looking for. But staying over the 68 level. I'm in some 75 calls, for a couple months out, so I definitely want to see it hold this 68 in order to stay in the position. Because I did actually roll into those. I was already in some 65s previously, so I rolled up into some 75s with a little bit, farther dated out. So we're nice and green on those, but definitely don't want to see it lose the 68 level, or I'll take my profits and run. Because obviously, we've seen it many times. It can come all the way back down to this 59 level. So if any news comes out in the oil sector, as far as, Biden getting deal done with Venezuela or any of that, we'll see these energy names sell right back off. There'll probably be a good buying opportunity once again, maybe for a couple more rounds. But eventually these things are going to lose their flavor, and, people are going to shift into different sectors. I think energy's outperformed, obviously, I think by like 50% this year compared to everything else. So, sometimes people start shifting, looking for other opportunities. Obviously, these have made people a lot of money, so you're going to see sellers selling anytime it reaches these 52-week highs, unfortunately. That's why it's so hard to get a breakout, but we're going to still look for that. Because obviously people are definitely still interested in, especially this name. So we'll see how that one goes. We'll see how it goes, see how it plays out. As far as, let's see, what else do we got this week? Yeah, some of the news headlines, obviously. Everybody's talking about Elon Musk buying Twitter, saying he's overpaying for it by a lot. We know the math. It is. He's overpaying for it. But I think Twitter will be a lot better with Musk owning it. I have a feeling it's going to get fun on there. Especially he's talking about this X everything app coming out in a few years. Definitely an interesting dude. Definitely an interesting dude. He's built some great companies. Obviously he's smart. He's a little, he's, either you love the guy or you hate him. So I'm not going to give my opinion on that. That's for you guys to decide on your own. Consumer savings is a mixed picture and a problem for the Fed. Yes. So basically, the Fed wants to make the consumer weak, and the consumer is remaining strong. And I think that has a lot to do with people are a lot smarter now. A lot of the generation that has a good savings lived through 2008. So I think just people have smartened up. I mean, obviously, if you're super poor, then any recession is going to hurt you very bad. But a lot of people have prepared themselves for, situations like this. And it can still get worse, and it's tough, even on people that do have a savings. But I just feel like people are better prepared this time around. That's why I kind of think the market's going to hang on for a little bit longer. But I think we're going to have a tough road ahead of us for, possibly 3 more years. Some of these big name guys, they're calling for a 10-year long flat market. I just don't see that. I don't see how the market's going to stay flat for 10 years. There's way too many people that are interested in the market nowadays. You can trade from your phone. You can buy stocks from your phone. So there's too much money pouring into stocks in order for us to trade flat for 10 years, in my opinion. But that's just my opinion. We'll see how it goes. Although I do think 2 years is definitely in the realm of possibility, especially considering all the geopolitical issues we have with wars going on and central banks having issues. There's a lot of problems we got, obviously. But you know what? We're going to get through them together. Hedge funds shorted the pound. Of course they did. PVC prices are falling. Why Warren Buffett should be worried. US dollar is super strong. Yes, the dollar is super strong, but it's definitely not something I want to risk, buying up here. It's going to be a pretty big reversal when it does happen, so I'm just not the type of guy that buys tops of things and tries to, get small gains. I'm trying to buy low and sell high. That's the bottom line. Why would I buy something that's already ran so far? Just not my style. I know a lot of people do like to play breakouts. That's just not me. Unless it's just a day trade. I'll play a breakout on a day trade, but that's the only time. I'm not trying to go long on anything and I'm mostly a swing trader, so I'm not trying to go long on anything that's near highs. Like I said, Oxy, I got long there when it was on, it was testing that 58 level. So, of course, I'm going to stay long and try and wait for the breakout to happen, but that's just not my style to buy something, like Oxy. I might take a day trade at 68, but I'm not going to sit there and go long and hold it for months at a time at 68. It's not the way I do things. Tesla won't stop falling until Musk stops selling. Yes, we don't know if he's going to sell shares yet to buy Twitter, though. He does have some financing locked in, legally binding. I think one of the banks did pull out, so he does have to come up with approximately $2 billion to cover it. So he could end up selling $2 billion worth of Tesla shares. I'm looking at that 215 level on Tesla. We'll take a look at that real quick, too, while we're at it. Because that has, I'm still sitting short on it. I've been short for a while now since the first dump. I mean, it's lost like 20% in a couple days. It's just getting beat up with him buying Twitter again. They think it's going to take his mind off Tesla. It's also going to take his money away from Tesla. So, and if he has to sell more shares, we could definitely see some more weakness. June lows are down here. So like 207, 208 area. That 215 area is kind of what I'm targeting with my shorts. We do got some demand there. There was some decent volume on that too. Yeah, let me stretch this volume profile out. See. So yeah, we got a volume shelf right around the 220 area as well. We lose that. That 215 is right here. That's the bottom of this volume mountain here. You can see right here. So you're going to have buyers, looking to try and catch Tesla down here. There's way too many people interested in Tesla, and Tesla, in my opinion, Like I said, I'm not a financial advisor, but it's a great investment. Great investment long term, close to 200 bucks. I'll be adding 215 and under. I think 200 is an amazing buy on Tesla. When we saw when the market was dumping previously, Tesla had a lot of relative strength. You know, it was holding up here around $300. You know, and we could look at SPX for example. While Tesla was doing that, you know, it was coming down. It was, you know, down here. We did get the pop, and then we sold it off again. But overall, Tesla has shown relative strength, just like Apple has. Apple still has not reached them June lows around that 130 zone. Tesla's finally revisiting that level, it looks like. So, with the Twitter news, I definitely think that's possible that we're going to see the June lows and possibly a little bit lower on Tesla before we get it picked up again. Looking at Apple here, 133.49 is that 38% retracement level from the COVID lows. Previously we dipped down here, we got it all the way down to, I think the very low was like 129 and change. I actually added shares myself at 130. I'll be actually looking to do that again. A lot of people think it could go to 110, which is, you know, you can see on the volume profile, it's a big spot for it too. I think 118.25, that 50% retracement level from COVID lows though, I don't think Apple's going to get under that. I just don't see it. There's way too much institutional money pouring into Apple when it gets down to these lows. That's why it's been so relatively strong, you know, despite all the bad news lately. There's for the iPhone Pro Max, there's like a month wait to get one right now. So the demand's still there on Apple phones, you know. I mean, Apple kind of leads the way in the industry. You know, people look at it as a safety net. So I'm a buyer. I'm a buyer at 130. If it gets there again, I'll add it again. You know, it's a stock that I actually do trade, but I also hold it long-term equity. So, you know, I bought a lot of shares at 130 last time. I sold them, you know, at 165 all the way up to that 175 level. I mean, that rally was just tremendous from July to August on Apple. We might not see that type of strength again for a while, but I'm still a buyer at 130 on Apple. You know, I can't help myself. And if we do go lower, I'll dollar cost average in because I think Apple's a great company that's going to be around for a long, long time. So, what else do we want to look at here? Well, let's take a look at something else different that I actually like. It's CCJ. We've seen these uranium stocks performing very well. You know, I think they're going to be on their way to new highs very soon. A lot of money's been pouring into these stocks. I think there's a good future with this type of energy play. So I've been buying dips in 26.50, and that's pretty much where we closed in the after hours, you know, session. We're down here at 26.51. The volume profile on the daily though shows that, you know, people are buying it up here now. There was a ton down here, but yeah, I don't think we're going to see this very much lower. I think that 26.50 is probably going to hold, but we can see it down to like 26.15 again. I'll add again there. You know, I'm not selling these until we see all-time highs. I have a few leaps on this as well, call options, but it's been a rather strong performing name, and I definitely like the company. I also like, for a little cheaper option on uranium, I like UEC. You can see it's got a similar chart here. I've actually ran options on this a few times, and they're good. I mean, this has been a buy for me at 325 all day long. You can see it's been trading in this range between 325 and 460. I'm looking for a breakout to 5 eventually here, and potentially, you know, long term, I want to see it break these highs. And I definitely think that's possible, you know, over the next year and a half. So I'm holding equity, and I'm adding every time it comes down to the bottom of this range here. Just something different to look at. I mostly play blue chip names, but there's a couple, you know, like these that I like to look at as well. So, hey, if you have any questions, feel free to get in the comments. Be sure to like and subscribe. You know, follow Who's Your Boy Trades. Check me out. I got a lot more videos coming out. Remember, check out the bull print free week trial on the Discord. You won't be disappointed. I'm telling you, you'll love the place. We got a great group of people in there, some great analysts, great environment, great community. Give it a shot. I'll include the link, the referral link. You can find that in the description of this video. And until next time, thanks for watching Who's Your Boy Trades. We'll be back in again in a couple days. Have a good weekend.